downloaded and sent to you on a call. Only the extract. Okay, सिर्फ एक extract भेजा है, उसको ही open करना है अभी. इसको बाद में जाके आप download कर सकते हैं. Then you can split the file and make it different sections. Okay. So let's start. So when you go to an annual report of a company, you want to know, what this company is doing. First of all, you must understand what the company is doing, what the business, and you will get all information regarding the company. We are talking about Reliance. So the main important, on the annual report is a document called Management Discussion and Analysis Performance Review. This is a very important part, which is there with any company's annual report. It talks about, various parameters of the company in terms of. Okay. So if you can understand, the company has done a turnover of 9,74,864 crores of interest last year. It's the largest company in India. Nobody is within near to it. Now, this figure, if you look at your Excel sheet, it's not going to match, or the screener is not matching. This because it's a gross number, including GST. It is goods and service tax expense. So if you take out that number, it may very close to number which is given in the Excel sheet or the screener. If you go to the screener, and see the screener, now somebody was telling that the numbers are not matching. Who was that? So if you look at the numbers, it is 8,76,000 is the sale revenue. Okay. But if you look at the balance sheet of Reliance, it tells you that number is 9 crore 74 lakhs. Okay. So that you have to go to the balance sheet. So I'll take you to the balance sheet also. Like for example, you go to the balance sheet of Reliance. So if you go to the balance sheet of Reliance, which is there again in the Excel sheet, in the annual report, which I'll share with you. I have not shared with you this. So look at. So if you look at the income of the company, it is 8 crore 56 lakhs income from services. Okay, so there are two kinds of businesses that they are selling goods and services. The total combined turnover is 974 crores or 9 crore 74 lakhs 864,000. Okay, then GST, which is 83,000. So the figure is somewhere like revenue from operations is 8 crore 91 lakhs. Okay, so there is some gap between the figure which is shown here and here. So we'll try to find out what it is. And I'll ask you to just go through and see what difference, why the difference is coming. Okay. Now, maybe that that this number was audited, so maybe that they had to make some changes at the time publishing the annual report, and the screener published the unaudited accounts or the first kind of a report which was published in the newspaper. So there can be some differences between the number which is reported by screener and, or it can be some reasons also. So we can look for that. So coming back to एक सेकंड. हाँ जी, क्या बोला? Just get to screener and just download the balance sheet and just check what are the differences. Find them, you just correct the statement in the screen yourself because you're downloading on XG. Otherwise, still you with the number which is being reported by screener. You can even counter check with moneycontrol.com and other sites. If all the numbers are the same, then you remain with the screener number. Fine. If there is no gap between the other financial sites matching with the screener, then you stay with that. You don't have to make any changes. Because I told you the balance sheet is made as per the Companies Act Schedule 3. Okay. So there are certain differences between the management report and Companies Act report. So that's why there can be some differences. So they're not to be bothered about. So let's talk about Reliance, the very important part. What is Reliance doing? What is their business? Okay. So it is very important before we analyze a company, before we think about whether we should buy the shares of their company or not. you should carry out an analysis, and that analysis is called fundamental analysis. First of all, you must know the company. Okay. Now, Reliance is a company which has many businesses. It's a conglomerate. Please listen to me very carefully. It's very important, and you will never get this information anywhere. So please focus and understand what I say. So it's a conglomerate. It is present in six kind of businesses. So I'll just open up the file and tell you what the businesses are and what it is doing. So, it is having businesses. I'll just show all the businesses. So, these are the six kinds of businesses. Oil and gas, oil to chemicals, retail, business service, entertainment, and new energy. Now, first of all, the main business started as an Excel company long ago, long back, 30, 40, 50 years back. But then, the Reliance is now, the main business is oil exploration. They started with oil, exploring oil from the seabed. So they have got rigs which they put on a deep bed and explore oil from there and dig out oil. That is called the crude oil. Okay, so the first business of the Reliance is to take out the oil from the sea or from the rocks, and the oil comes in form of crude. Okay, now, so that is the one main business which is called oil and gas exploration. Refining of oil and produce petroleum products, gasoline, diesel, kerosene, all those kinds of products. So that is called refining business. Okay. So oil to chemicals. Then when they refine the crude oil, then they come out with some byproducts, and which are chemicals. So there is a petrochemical plant of Reliance which produces chemicals which are found applications in plastics and many industries. So we'll understand as we go along the annual report of the company. So these are the oil related businesses. First, produce crude oil from the seabed, okay, by pulling through the oil through rigs, and then convert that crude oil into petroleum products, and then refine them and produce those products, and then you do basically which is called petrochemicals. Okay, you make petrochemicals. After that, you make chemicals which are used in many applications. So refining, exploration of oil, and then converting into the byproducts of those products. Okay. Then, of course, they are ventured into many other areas. They are like retail. So they are present to many kind of retail businesses. Okay. So we'll talk about that. So let me just, and then you first just understand the business, and then I'll go deeper into that. So they are into retail, then digital services. We use Reliance Jio Telecom, then media and entertainment. So they have the CNBC, Colors, and many businesses, and Book My Show. So then new energy, that's the new business which they started. I don't know whether they have not reported any numbers there. Okay, so let's go back and see the annual report and understand. So the turnover was 9,74,864 crores, and this figure is GST. When you look at the screener, the figure is something 8,70,000. You minus GST, you come to very near to the number. We have some just from that. Then their their profit after tax was 43,000 crores. This is coming right from the annual report of the company. 43. Now look at the turnover. Their turnover has gone up by 23.6% compared to the last year. It is say 23%, 24%. So company has grown 23.6%. Top line growth of any company, and the bottom line growth is 13.4%. So that means compared to last year, they have actually shown more profit by 13%. Okay. Fine. So this is profit after tax. Then if you look at the gross debt of the company, before that, how their revenue stacked up. Sorry, the EBITDA contributions. Okay, so we'll talk about how much EBITDA they have made. Okay, gross debt. Reliance gross debt was 3,13,966 crores. Huge amount of debt they have taken. Okay, no. This includes standalone gross debt of Twitter. So because Reliance has many other companies, subsidiaries, all put together, their debt is 3,13,000, and the standalone Reliance itself has a debt of 2,15,000, and they are given debt segment wise. Reliance Retail, the debt is 46,000. Reliance Jio, 36,000. Independent Media, 5,000, and some more companies. So these are all the subsidiary companies which have been consolidated along with Reliance. Okay. Then okay. Now the company is earning, profit, which is called EBITDA. Okay. Before we know how much EBITDA they have made in terms of crores. So their EBITDA means, what's the full form of EBITDA? So oil to chemical business is contributing 41.5% of the profit of the company, the cash profits of the company. EBITDA is nothing but proxy to cash, it's a cash profit of the company. Then digital services comes the second, okay, which is 33.6, Reliance Jio, okay. Then retail, all those businesses this company has, Reliance Mart and other things, and you go and Reliance Fresh, it was earlier. So that is 12%. Oil to gas, oil and gas, 9%, and others 3.8%. Breakup of companies' profitability in terms of various segments of businesses. Just hold on. Yeah. Once you have bought machine, then you charge write off those assets for the credit assets. Okay. What else is that? The government, you get license for security, like every one last the government will get. The bank, you have to pay a license fee to the government. So that is you amortize license, intangible assets like copyrights, goodwill, all those are written off over the life of those assets, and they are amortized. So depreciation and amortization is not a cash expense. If you are making a profit before it, it's called EBITDA. Okay, fine. So that's a cash profit of the company, and the cash profit is very important for understanding the business. So that is basically, if you say EBIT, which is earning before interest and tax, and EBITDA means before depreciation and amortization, you talk about cash profit. Okay. Now EBITDA is before depreciation, isn't it? Before amortization. Now when you compare two companies, okay, within the same group, within the same business, or within across the globe, then you compare it on the basis of EBITDA. Okay, because after that, two profits. For the use of capital, you have debt, you pay interest. If you don't have debt, you don't pay interest. So a company which has debt, they will pay interest. The company doesn't have debt, they will not pay interest. So when you are comparing the companies in terms of profitability, you should compare it at the EBITDA level. How good is that company? Okay. After that is just basically you are paying tax. Now tax can be different taxes. Okay, tax in India is different, taxes in America is different. Again, within India there are about 3, 4, 5 kinds of rates. The new companies so they're about 25%, 22%, 30% taxation, all kinds of taxation. So tax can distort the profits of the company. Interest can distort the profit of the company. Depreciation is again, some companies can write off their assets on the basis of straight line. Companies can do it on a written down value. Okay, and then depreciation rates are different across the globe. So if you want to compare two companies, two telecom, then you have to compare it at EBITDA level because everybody will have different taxation. So before tax, how much profit the company has earned on the total resources or total capital they have borrowed or whether they have put own money. So you want to know how profitable is the company. Suppose you want to buy a company. Suppose you have a huge amount of money. Okay. So you don't look at the net profit. Look at the EBITDA or EBIT level. Because that will tell you a very good picture that whether the company is. So when you compare EBITDA versus of two companies, now to take it forward, you calculate EBITDA. So it is basically the EBITDA divided by sales. So when you have EBITDA, which is like this, okay, and then you divide by sales, you get margin. Okay, so this is called EBITDA margin or profitable margin. Now, so this is the operating margin of the company, and then you just try to see whether the margin is improving or not over the years. as we can see, Reliance, the margin has gone from 15%. We can just go through all the segments and margin is improving. Now, that is one. The second is companies you come across to know which company is better. When I was working in the, Idea, Vodafone long back, so we had an EBITDA margin of 25%. Whereas this was Idea. Earlier it was known as Idea, now it's called Vodafone Idea. And Airtel, which was that time one of the benchmark for us, which was their EBITDA margin was 35%. Okay, so they were more profitable than Idea. So then we wanted to know, can we bridge the gap? Can we also reach to 35% level? With something Airtel is doing better and we are not doing. So when you're comparing two businesses, Airtel was much profitable because they were generating 25% and we were generating only 25%. Okay. Now, so the task was given to me, I know why there is a 10% gap. So I just gone into each and every details about my company as well as some numbers from Airtel. So we found that for example, the Airtel was operating at 900 megahertz bandwidth, and Idea was operating in 1800 frequency band. Now, these bands are allotted by Government of India to offer mobile services. Okay, fine. So each telephone there were given bandwidths. Okay, this they can pass the telephone data traffic, so they are using top. So this is called spectrum or frequency. Okay, so we use these frequencies. Now 900 was Airtel was an incumbent player. They got their megahertz bandwidth in 1998. Telecom open in India. So Idea came much later. Okay, so we got 1800 and 900 bandwidth was already exhausted. So we got 1800. Now 1800 bandwidth is 900 is more superior than 1800. The signal strength of 1800 is poor compared to 900. So to match with Airtel, we have to put two towers against one tower of Airtel. Number one, we have to spend more money. And now Airtel came into existence in 1995. We came up to say by 10 years. So they were, they had entered into rental agreements with the landlords, taking a place to putting the tower on the roof. 50,000 rupees rent on average. We were paying 40,000 rupees rent on an average. We had 1,000 towers. We had 2,000 towers. It was much more than that. So we found that on that account we are losing about 4 to 5% of EBITDA margin. Okay. So this way we worked out where all we were losing. We were, very poorly in terms of EBITDA margin. So just make a plan. How can we bridge the gap? Now here we got very about towers and the rentals, because the rentals have gone up and they were having an advantage of early mover advantage, first mover advantage. They settled and put their towers much faster. Okay. But now all that has been lost because now everybody is using 1800. 900 is exhausted, so the subscribers have overgrown. They are running into 100 crores more subscribers, so the bandwidth is choked. 900 is fully used. Everybody is now migrating to, for further subscribers, they are using 1800 megahertz. Okay, I'll talk about these bandwidths later on. A little bit more about technicalities about that. So that was the reason why we were not doing well. Then we found there are a couple of reasons we could improve ourselves. I'm not going to discuss that. So we made a program. How can we improve our EBITDA margin by say 3% in the next 2 years and come at least to 28% as against Airtel of 35%. It is very important to control and make decisions and analyze, whether your benchmarks and build up your plans. How can you, improve your profitability? Okay. Now look at the first. The first is digital services. Now there are 6 businesses of Reliance. Let's look at the first business, digital business, Reliance Jio. Okay. So the performance, the revenue from value of services. So their revenue was 1 crore 19 lakhs out of 9 crore 70 lakhs crores. So 1 crore 19 lakhs is revenue from digital services. And in the last year it was 1 lakh crore. In last it was 90,000. Okay. And similarly, revenue from operations, which means revenue from the business. Now this revenue can consist some other income also. Okay. So this is mainly from the Reliance Jio or digital services which are they offering. Okay. Reliance Telecom and other things. So This is their pure business, which was 76,000, 85,000, 1 lakh. And EBITDA. EBITDA was 49% margin. Last year it was 47, then it was 44. Okay, so they have been consistently increasing their margins. Okay, and the profit is also going up from 34 to 40 to 50,000. Okay, so we find that Reliance digital services are doing very good. Their profits are improving, their sales are improving, their margins are improving. It's a good company. Okay, fine. So now, Geo Industries leading net subscriber addition was 29.2 million. So last year, from April to March, they added 29.2 million, which is about roughly about 3 crores, about 2.9 crores of subscribers, and with a monthly churn remaining stable at 2%. So how every month new additions are there. Old customers also leave. Sometimes I'm migrating from Reliance to Airtel, and what do you call that? Portability. Okay. So you are porting yourself from one operator to another because you don't like Reliance, you are fed up with Reliance because your area is not being well served. So we will just go to other. So that is called the churn. So there is a 2% churn. So we always put our, when I was in working in telecom, so we were saying our target is less than 2%. How many? We may add some subscribers are going to leave. So, they leave because they may not be happy because our network is not good or we're not, providing them service. So we should have some targets with regard to churn level. And we should be maintaining that. If our churn goes down, our service department is doing a good job. Okay, our call center agents are able to satisfy the customers, so they all get the credit for that. Okay, so we keep our targets for churn also very important. No customers should leave us. If they leave us, the agent will call and try to bring them back to the network. Okay, just read this. Who was reading last time? Anand ka hai? Abhi hai, sorry, Anand ढूंढ रहा था. Just read this. Just hold on. Whether I've started my, Okay, this we have already done. Second. ARPU increased 6.7% year-on-year in quarter ending March 2023 due to impact of tariff hike, better subscriber base, and data add-ons. Okay, ARPU is called ARPU. ARPU means average revenue per user. Okay, which was how much? Which has increased by 6.7%. When I was working in telecom, way back in 2001, the ARPU was very close to about 1,000 rupees. 1,000 rupees per subscriber was giving us. But now that has fallen to 150, 160 rupees. Okay? Because the tariffs have come down. That time the tariff was 16 rupees a minute, then came to 8 rupees a minute, then came to 4 rupees a minute, then came to 2 rupees a minute, then came to per second billing. Now there are no tariffs. Everybody pays a fixed amount, and then they are having unlimited. ARPU has increased. Now this is a good news because ARPUs have been falling over historically of all the telecom companies. They have never gone up. We used to all meet Airtel, Reliance, Idea. We used to have meeting with all these players, and we would tell them that our ARPUs have to go up if we have to remain business. Otherwise, we'll be lost. We'll be losing money. So we used to come up with a lot of every day there was a price war because every next day the price was being slashed. But sometimes by Airtel, sometimes by Idea, sometimes by Reliance. So we were always, on the third day we were matching those things. We are coming with new plans. Every third day, new plans were being announced. So when I was making my statements every month, I was getting puzzled which plan is applicable, which is not applicable. So I used to call the marketing guy who's actually, we were having a full complete detail about what the plans which are working now. So he told me, sir, this is a plan we are offering now, and you can just make your statements and analyze your statements and present to the management. So ARPUs have increased now. Over in the last years, all the telecom companies have tried to improve their ARPUs because they have fallen to the rock bottom, and everybody wants to be profitable. Most of the companies have been losses nowadays. So ARPU has increased due to impact of tariff hike because the tariff hike is a tariff hike given by Reliance, by all other players. So that's a good news for all the telecom players, but bad news for consumers because we have to pay more charge. And better subscriber mix. Now subscriber mix is like you are postpaid, prepaid, the data pack, all kinds of packs which the company comes with So if a person is using a better pack which is giving a good revenue to the Reliance or any telecom player, so they're saying it's because of the better subscriber mix. normally a postpaid subscriber gives you much more than a prepaid subscriber in terms of ARPU. Okay, because you have to pay after a month. So you normally have a bill of 600, 700, 1000 rupees. But if you are a prepaid customer, you will limit it 200, 300. Okay, students will do that. So more the more postpaid, better for the company. So when I was working in telecom in Idea, so we used to have 90% postpaid and 10% prepaid because prepaid has not set into India. But now it is 99% prepaid and 1% postpaid. Okay. So that things have changed over time.
Geo network carried 13.3 exabyte of data on its network 50% year on year. Geo continues to carry
Just hold on.
of data.
Yeah. Okay, let's see. Okay. Geo network carried so much of data. I mean, this is 55% of the data traffic in the country. So they are carrying 50% of data of India is carried by one operator. Okay. Now there are around 3 or 4 operators: Airtel, Idea, Reliance, and BSNL or NTL wherever they are present. Okay. Any other place there? Now all the players are folded into one. Right? So healthy subscriber additions across mobility and homes improvement ARPU and scale of digital. Okay. Services. I mean, so this has helped to increase the revenue of the company. Then, fine. So rest is you can always read that. Okay, what was the strategy of Reliance to improve their revenue? Now we come to the media business. Media businesses they're present in PTs, colors, and CNBC. Okay, so of course this is a small business. 7,000 was the turnover. Okay, from the total, and 6,000 from operations from their main business, and rest was other income. So if you look at this, which is from the business, 4,000, 5,000, 6,000, it's going up. And in terms of the EBITDA, this thing it has come down 236 crores as against 1,040. So it was only 3.8% was the EBITDA margin compared to what they were doing around 18%. Now what had happened was after COVID, all the companies have cut down their advertisement cost and advertisements and they've come down and they have even closed some of the channels. Okay, so because of that, because of the lockdowns and because of COVID impact, so many companies have curtailed their budget of advertisement. So which has actually resulted in dropping of the EBITDA margin of on TV and media. Okay.
So
okay, just read this. Okay, just read this. Tell us about advertisement.
Advertising revenue was impacted by the economic slowdown and high inflation, which constrained advertising budgets for companies across sectors. Colors
Okay. So also affected the advertisement. So this is all because of this the advertisement revenues have grown and that's why they're lost on account of EBITDA margin. What's the question?
So the media business, how the revenue from services and operations,
I'm saying the revenues may consist of some other income. Okay. The main business of media is to provide services through TV, okay, or this thing. So the main business revenue is this, and this includes other revenues, which may be interest, which may be dividends from other companies. So we can go and look at the balance sheet and find out. Okay, fine. But this includes other businesses. Is that okay? So this is their main revenue from their main business, and the total revenue, which may include other income, which may be a rental income, maybe investment dividends, or some kind of other income. So which is boosting their revenue. Company has money. Okay, they have picked up 35,000 crore rupees to be invested, so they have parked them in various investments. They are generating some revenue, which will boost up the revenue because they may have tied up with a company and they got huge amount of money, but they are spending it on a staggered manner, so that money is being put into for investments and that is generating some revenue, which is increasing. So that can be one reason. Okay, fine. So now you can just read that on your own. So I'm just leaving it. So fundraising. So this is how the fundraising works. They have raised some funds.
The financial evaluation committee, the company and the subsidiary Reliance Infocom Limited tied up 3 significant term loan facilities. The transaction was
they have raised 3 3,000 crores. So they almost rate like, today's 83 the dollar, so 8,300 crores. Now they have raised about how much? Close to 25,000 crores of rupees in the last year. Okay, fine. Then the business comes retail. So we have done, which kind of business we have done? Media. So media and digital. Now the third business is called the retail. Okay. Okay. So retail, okay, just read.
Reliance Retail operates an integrated network of stores, commerce, and new commerce platforms. Reliance Retail is India's largest retailer and is committed to delivering exceptional value to our customers while driving sustainable growth for our business and stakeholders in the ecosystem. It is the only Indian retailer to feature among the top 100 global retailers and ranks in the list of fastest growing retailers globally.
Okay. Yeah, but and speak loud so that you can record it, your voice can be recorded. Okay, fine. Otherwise, it will come very female voice when you understand. Anyway, it's written, so he's just reading what is there. Okay. So, what Reliance is doing, they are almost adding 10 new stores every day. So, in the last year, I will come to know soon that they have added 3,300 stores during the entire year. So, they are adding 10 new stores every day into this retail business. Okay, let's understand what their business is. So, this is the team who is managing. So, what is their vision? Briefly, just read this.
Vision to be the most admired and successful retail company in India that enhances the quality of life of every Indian.
Okay, now when we get up early in the morning, all the time, actually Reliance is coming into our daily life. So, when I come in the morning at 6 o'clock and I open my door, so there's of my door, which is milk basket. Reliance. So I have all my information. Then the Reliance phone which I'm using, okay, TV I'm watching, and you take it everything, using the of Reliance every day. Coming into your daily life and helping you. Okay. So let's talk about what kind of your groceries are coming from Reliance. Okay. Reliance retail in everyday life. First is ready for the day. Just read. So trend footwear, all those things, garments, footwear. So these are the brands which are owned by Reliance. Connectivity using Reliance Jio. Okay. Then ethnic wear, luxury wear, daily. I mean net mats. You order your medicines from net mats. Home decor. You order your furniture. Milk basket. Okay, milk basket is there with a dairy substitution. So you have milk basket here. यहाँ आता है milk basket में कहीं? Okay, कहाँ आता है? नोएडा में. Okay. Gurgaon is also there. So what they have done, they have done the growth either through organic by acquiring companies, organically or inorganically. These are the various kinds of tie-ups they have done. Apparel, strong design and sourcing system, footwear, and all these other, they have done tie-ups with Kappa again. Okay, fine. So these are, all the business, all the companies to whom they have tied up, and they have increased their business. Okay. Then they're talking about how their business is growing. Okay. Okay. So look at this. Revenue update performance.
Revenue has grown by 30.4% year on year, and EBITDA has grown by 44.7% year on year, led by broad-based growth across consumption baskets.
So their revenue has gone up by 30%, whereas their profitability has gone up by 44%.
The business delivered robust LFL growth across consumption baskets on the back of high footfalls and conversions.
Okay, just hold on. Okay, just read this. This year, the business.
This year, the business opened with over 3,300 stores. The year reflects an unprecedented growth of retail footprint as business has added 25 million square feet store area, representing more than 50% growth of retail space year on year.
So they have added, 3,300 stores and 25 million square feet in terms of area for retail, and then they have added 12.6 million of the warehouse space. Now what is it doing with the warehouse space? physical outlets or you are delivering. Nowadays, everything is online. So e-commerce is basically you should have a place where you make the products in a logistics into a warehouse and then you deliver from there. Okay, so they are adding both. So if you look at their revenue, it was 2,60,000 crores, which was the second most highest after the oil business, which was, there is an increase of 30% in from 1,99,000 to 2,60,000. From the main business, it has gone up by 32%. EBITDA has gone up from 12 to 17, 44%. EBITDA margin has also increased by 70 basis points. So that means company is becoming profitable. In each segment, what you have seen, the margins are improving, the sales are improving, and the business is going ahead. 1 billion customer transactions. So these are, the tie-ups which they have done, the businesses, they are into jewelry, they are into apparel. Okay. So this is their, grocery. So you can just read them if you want. I read it, I just got up at 3:30 in the morning. I was just reading through all this. Okay. So that I can halt wherever I feel that I can just, ask you to, focus on certain things. So I can just, understand where I have to stop and where I have to ask you to read yourself. Okay. Then we come to digital services. Okay. Digital services. Okay. The telephone. Geo is.
Jio is augmenting India's largest digital services platform with the introduction of 5G capabilities and cutting-edge wireless access solutions. Plans to roll out its 5G network pan-India by December 2023. Jio intends to deliver a truly robust and converged network experience combined with disruptive digital technology platforms for entertainment, commerce, communication, finance, healthcare, agriculture, and education.
Okay, in 1995 or 2001, when I joined, telecom, so we were providing 2G services. Then came 2.5G, then 3G, 4G, and 5G today. Okay, 5G plus. So vision.
Jio strives to build technology-enabled product platforms for a digital society, leveraging indigenously developed technologies to serve global markets. Jio remains committed to connecting everyone and everything, everywhere, always at the highest quality at the most affordable price.
Okay, so we'll just leave that. This is the competitive, why they are so, what is their competitive advantage over others? That's called competitive moat. Okay, fine. So I'm just going to skip that. So this is, their products basically. Okay, for consumers, for home, for small merchant businesses, and for entrepreneurs. Okay, like we have, for example, Geo TV and Geo, stores. Okay, and then this is for various kinds of groups who are using the products. Okay, just read this. Robust increase in data usage.
The total wireless.
Just hold on. When I was in telecom, we are looking at two things: the data usage and the revenue we are generating per minute from the customer. If you multiply that, you get ARPU. Like I just tell you. Suppose on an average, at that time, everybody was using 400 MOU, minutes of usage, and our revenue was, say, for example, 2 rupees per unit, per minute. So our ARPU was rupees 800. So I'll just explain. On an average, every customer uses 200 minutes per month, and we are getting 2 rupees per minute from our customer. Revenue per minute. So it is called revenue per minute. Average revenue per minute, and this is average MOU. Okay. So if you multiply it, this is the number what we will get. Okay. Fine. So what was happening? This has been going up, and this has been going down over the years. So this has gone up to say 800, and this has gone down to just say 10 paisa. So or say 1 rupee suppose. So then it will be 800. So maybe it is say 25 paisa. So it will be rupees 200. Fine. So MOUs have been going up. People are using more and more minutes, but the revenue per minute of the companies are declining. Okay, just read this.
Total wireless data usage across the country increased 19% to 155 billion GBs during current year 2022. According to Ericsson Mobility Report November 2022, total mobile data traffic in India is projected to reach 53 billion gigabytes per month by 2023. The share of smartphones in the total mobile subscription is expected to grow from 77% in 2022 to 94% by 2028. Monthly mobile data traffic per smartphone is expected to more than double to 54 gigabytes during the
So now we're talking about data, how much data we are using. So data per month, this per month, na, 54 GB. So every month we will be using 54 gigabytes of data. In our time it used to be megabytes. Now it is gigabytes because you're downloading a lot of videos, making video calls. So this is consuming a lot of data traffic of the company. Okay, just hold on. Now let's see. So okay, just forget this. So we have 33 million, maybe 3 crore 30 lakhs wireline wired broadband at home. You're using connected to your fixed line. This is through your mobile. 80 crore people have wireless broadband. Okay. So if you look at now, they're number one in data consumption in India. They're number one in voice consumption. For making telephone calls and for using data, they are number one player in India in terms of traffic. Okay, fine. And then their sales, if you just focus on this, revenue from operations have gone up from 40 to 85 to 1 lakh. Okay, and their margins, this is what has changed. Okay, so the change has been, what are you finding here? Whether the EBITDA margin has grown up from 47 to 49, 200 basis point. But if you look at year-to-year change, what is happening? 19.6% increase in the top line, okay, or 19.8% the top line. EBITDA has gone up by 25%, and margins have gone up. Again, the fourth, kind of leg or vertical is also profitable, and the profits are going up. So far, what we have done? This is digital, okay? Media, digital, retail, and तीन करें चार करें तीन करें चलो I thought we have done 4. So look at the ARPU. ARPU is the average revenue per चार करें तीन ही करें. So ARPU is 178.80, which was earlier 167. So the companies getting more money from each customer, so it's good news for them. Per capita data usage, GB per month. Now I was referring to MOUs, that was minutes of usage per month. This is the data usage per month, which is 23.1 gigabyte, which will go up to 55 gigabytes per month per customer, and it was 19%. So now usage is 1000, which was 400 at my time, which was 968. So usage is going up from 400. That time we were looking at a number of 400, and now it is close to about 1000 minutes per month, which the telecom, individual customer is using, and the per capita usage and the ARPU, which tells you how the profitable the company is. Okay. So then we have this air fiber, which is going to be there now. So we come to media and entertainment. Media we haven't done, is it? No. Okay. So we will do the media and then we'll have a break. Okay, fine. Media and because we started right at 9 o'clock, isn't it? Media and entertainment. Okay. Just read this. Network 18 Media and Entertainment, one of the India's most prominent media and entertainment conglomerates. The 360 presence across content genres including news, entertainment, sports, movie production, and live entertainment. So this is what the media is mainly. Network 18, and then we have. So these are the people who are looking after their business. Ramesh Dawani. Vision and Vision. Okay, just week I'm just picking it. So this is their product basically. Colors, display colors. Then we have CNBC Awaaz and CNBC TV English channel. Then lots of others like Music TV was also part of it. Music TV. Okay. So these are the CNBC News. Okay, that is part of your listen. So just look at this is their you know their business. So this is do you watch this Vantage? ये देखा आपने कभी? Very famous Palki Sharma, who is a very good journalist. She was earlier with Beyond with you. So they are their own studios. So here we just have a break, okay?